Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable data ahead of the Wall Street Open. Coming up, a Fed pivot. Well, US stocks are indicated higher, Treasury yields extending declines on those rising hopes of a dovish pivot by the Fed in 2024. Also watching retail, the latest out with numbers gap, better than expected Q3 results there. We'll have a look at what that means for its shares. And Applied Materials shares indicated lower on reports that the semiconductor equipment maker is now under investigation. Now, not long before Wall Street starts trading, just let me show you what the equity markets are doing, because it's looking quite subdued up there, but we are seeing a slow trickle higher. Let's just show you the minute chart there to give you a better idea of what I mean. There's all this amazing data that's meant a pivot in the thought process surrounding interest rates in just the last few sessions. In fact, many market watchers out there now saying that perhaps we could have a US rate cut by the first half. What a change given just a few sessions ago. There's still worries that the Fed might actually raise rates yet again in its fight against inflation. Treasury yields also extending declines, is showing you the volatility index there. Because if you look at the volatility index, it is showing an incredibly low level. There you go, 15.2. You would have thought there wasn't two wars going on at this time. Everything has been kind of reversing, if you like, after recent economic data supported bets of this dovish stance by the Fed by next year. The S&P 500, let's have a look at the US 500 there. This also is showing the same sort of story as the other two. Here we go. And we're seeing the S&P 500, or rather the US 500, and the NASDAQ, which is called the US Tech 100 on our platform, eke out marginal gains since Thursday's session. Now, just some breaking news coming through now. This is from the US housing market. The housing starts, that's what we're looking out for. We're looking out for 1.35 million. We got 1.37, slightly higher than expected for October. And looking at building permits as well, 1.45 was what we were looking out for. And we had a slightly higher figure, but ever so little, 1.48 there. This is key given that the housing market has been very sluggish. In fact, home building plunged to a more than 3-year low back in August as higher mortgage rates really weighed on demand for housing, and not forgetting the cost of living crisis as well. Now, as we look beyond into next week, let's have a look at some of the events to watch out for. Jeremy Naylor joins me now. Jerry, it's been a really hectic week for investors. I think there's a sigh of relief as they head into the weekend, but next week looks really heavy as well. What's likely to shake the markets?
Well, I think going into the weekend, as you say, there's been a little bit of a kick into reality for some expectations on US interest rates. At the beginning of the week, there have been some what was perceived to be reasonable expectations that interest rates would start to come down in the US in May next year. Then all of a sudden we saw the dollar drop, we saw money going back into risk assets. So going into the weekend, as you've just said, it is going to be a little bit more sort of muted, I think, from where we were at the beginning of the week. But you're right, moving into next week, it's going to be an interesting week. To be honest with you, there's not much A-list data, if I'm totally frank with you. We've got a couple of companies reporting earnings which might be of interest. We do have some data points, but of course, as we know, it's a bit of a truncated week as well next week coming up.
Also, it's a huge week still for retail, the countdown to Thanksgiving, Black Friday, Cyber Monday. I know everyone stateside that I know is they start stocking up, but also, as you mentioned, still a few big names, NVIDIA and HP. What are you looking out for?
Yeah, look, let's take a look first of all at the earnings, because I think these are going to be some really interesting numbers. Let's go first of all with NVIDIA. This is the company that up until last year had just been another chip maker, another semiconductor manufacturer, suffering the same problems that the rest of the semiconductor sector was having, in as much as it couldn't get the supply chain together and it was getting behind in its orders. And then all of a sudden, NVIDIA has come out as the market leader. It is the poster boy for artificial intelligence. We're looking for earnings per share coming through on third quarter on midweek this week, coming week. $3.34. Look at that, a growth year on year of 475.9%. That's if that comes to pass. And I wouldn't mind betting that we've got an upside risk to these numbers as well. Revenue, 171% increase on this time last year, 16.12 billion. That's how fast money has been going into NVIDIA for people, for companies, for operations to buy the chips of NVIDIA to fire up these massive computers, which are giving this big AI move that we've got. And it really is all about AI, and that's driving revenue growth. I want to show you the share price chart. This is an all sessions stock. Now, going back, what was that, back end of August this year, this is the record high we had for the stock, trading at $518.55. We're on all sessions now at the moment. Not much move, $496.23. When we see this company reporting earnings next week, when we see the business come through with figures after the closing bell on Tuesday, you've got an opportunity to trade this because it is trading all sessions. And as I said, is the upside risk here still to be played for? We're currently trading 496. If you're long on this going into the numbers next week, you want to put your stop loss just below some of the recent price action, just to give you some sort of protection. But certainly the upside risk would seem to be there to present itself. Let me just quickly take a look at, well, the second company I think I want to take a look at, and that's another all-session stock, and that is Hewlett-Packard. The company is the all-session stock trading on the IG platform, formerly Hewlett-Packard, now HP. This is the hardware computer company. We're looking for 90 cents a share, 85 cents this time last year. This is fiscal fourth quarter earnings. Revenue down 7.6% from this time last year. But I think it's all about the outlook. It's all about next year. It's just a question of whether or not the demand is going to hold up that we've seen coming through this year. Despite all the headwinds, demand has been there for HP this year. Let's take a look at what's happening in terms of share price chart. As I said, this is another all-session stock to watch out for. Trading at the moment at 28.34, a little bit of an uplift on the session going into the start of today's Wall Street trading day today. So Hewlett-Packard, another stock to watch. But I think just want to quickly follow up on the other points you mentioned about next week, and that is that we got Thanksgiving come Thursday. Now, Thanksgiving means, of course, it's a holiday, national holiday in the United States. There's no trade on the cash session on Wall Street, but you can trade the 24-hour markets on the IG platform right the way throughout the day. And then on Friday, it's only a half day. So people get back to work. For those that don't want a 4-day weekend, they go back to work. It's a half day, 1 p.m. Local time. We get the close of Wall Street. And then the 24-hour markets continue on into the rest of the day on the IG platform. So you do get an opportunity to trade these, but quite frankly, volumes will be down. With light volumes comes a little bit of lethargy in the markets. So I think towards the end of next week, we'll see things cool down a little bit into the weekend. And then what happens? Well, it's Christmas time, just around the corner. Back to you.
Thanks very much, Jerry. And I'm glad you touched on Thanksgiving as well, because US airlines, the major ones, many of them all sessions on the IG platform, all expecting that Thanksgiving holiday travel period to show record air travel. So it looks like although the cost of living crisis is still in play, people are still traveling to see relatives. On to another all sessions stock. We are watching many of the semiconductors out there listed in the US because Applied Materials is under a US criminal probe for shipments to China's SMIC. This is according to sources from Reuters. This comes in a really sensitive time because, as you know, there are trade sanctions out there by the US in terms of chips. The largest US semiconductor equipment maker is being probed by the Justice Department, according to sources, for sending gear to SMIC via South Korea without licenses. This is the correct licenses. This is probably going to have legs, this story, especially if it's found out to be true. Shares of Applied Materials indicated lower, and we'll be watching that during the cash session. Also watching Alibaba for you. Alibaba is an all-session stock on the IG platform. It is extending its fall. Look at that red bar there, down some 2.95%, almost 3% now after the previous sessions, almost 10% fall. Alibaba extending this drop on all sessions after scrapping plans to sell off its cloud intelligence unit on uncertainties created by US curbs on chips. Now, much of this has been discussed already. out in the Twitter sphere, the two sides of the story. One is that this is a huge U-turn in terms of Alibaba's strategy. It was talking about spinning off this cloud unit for a very long time, but on the other hand, it could be a positive keeping that cloud unit in-house in a time when Alibaba really needs to step on the gas on developing its AI applications. Now, speaking of retail and Thanksgiving, also want to check in on Gap for you ahead of the cash session. This is Gap's chart here. As you can see there, Gap has been one of the retailers that has been slowly seeing its shares improve since May, but really it has been struggling for quite some time. Gap, the retailer, reporting better than expected third quarter results due to better sales at Old Navy, and also supply expenses are easing. This coming in a time when Walmart has also sounded a note of caution on consumers ahead of holidays. Target, though, chink of light there. Its shares rose when it talked about margin improvement and an inventory drawdown as well. To sport now, and I want to check on a long-standing story. Manchester United, just bring up its shares there so you can have a look. Manchester United, you can trade that in the cash session, but this story has been rumbling on. Now the latest is that British billionaire Jim Ratcliffe is set to buy 25% in the club for around $33 per share. This is according to Sky News. If this is confirmed, it represents a premium of about 79% to the company's last close of around 1843. Final details of the deal yet to be finalized and remains in the ongoing negotiations, according to this report. Shares in Manchester United down 21% year to date. Now, to commodities, oil prices are edging higher after sinking 5% to a 4-month low on rising worries about burgeoning non-OPEC supply, and of course the cooling demand as well. Concerns that big consumers like the US and China are not going to provide much demand or as much as OPEC Plus had hoped for. Just checking in on US crude for you. As you can see there, we're seeing 7,418 around $74 a barrel. And if you look at Brent here, I can also tell you that Brent is seeing a similar picture there, more on the downside really. 78.67 is where we're at the moment a barrel. Goldman analysts, well, they say that oil prices are down slightly this year, despite demand exceeding their optimistic expectations. So that is the call from Goldman Sachs oil analysts. Now turning to gold, and gold is scaling 2-week highs on that expected Fed pause, while IG's Axel Rudolph has been looking at the technicals and the reasons why if gold does break certain levels, we could be looking at 2,400.
Well, Angeline, gold is really interesting, as you say. I mean, if you look at the daily chart, we can see that we've basically bounced off the 200-day simple moving average, which this week held several times on 3 days, you can see here. And we basically now are heading back up again towards the psychological 2,000 mark. Now, that in itself might just be psychological resistance, but more important is the late October high around $2,009 per troy ounce, because if we can rise above there, and to me it looks pretty likely that we will over the coming days and weeks, then we could actually be heading back up again towards the highs seen between the August 2022 high and also the May 2023 high. And you can see here we had those 3 yearly highs back in 2020, back in 2022 and also 2023 between $2,070 per troy ounce and $2,083 per troy ounce. And this is a potential upside target area for the gold price going forward, because as you can see here from the October lows, we've had a very sharp ascent here in the gold price to this $2,009 mark I just mentioned in October, then had a consolidation phase, but held there and are heading back up again now. And we can see here we have a very positive candle forming this week. So If we were, and I expect this to happen, as I say, but if we were to exceed $2,009, I wouldn't be surprised if we were going to head back up again towards those all-time highs between $2,070 and $2,083.
Now, a quick look at the markets just as we remain counting down to the open in just a few minutes. Wall Street here showing a slight gain there, but it's only really slight, really. Let's have a look at the volatility index, and that still remains around the 15 mark. Pay attention to the US Tech 100 because that news on applied materials could weigh on the tech-heavy NASDAQ. Well, that's it for this edition of Beat the Street, the show that follows all the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.